All right, so the artificial intelligence revolution, it's not coming, it's here. It's happening right now, and it's being powered by these massive data centers and, all the super intelligent devices we use. But what if I told you that behind this entire global build-out, there's one single company that every major tech player absolutely relies on, a company that basically holds the keys to the future of computing. Today, we're diving into the investment case for ASML, a company that you can think of as the essential toll booth for this entire AI revolution. But to really get why this company is so critical, we have to start with a pretty mind-bending question, a question that really defines all of modern technology. How in the world do you print a circuit with features so small they're measured in single-digit nanometers, literally tinier than a common virus? I mean, it sounds like something straight out of science fiction, right? But it's the core engineering challenge of our time. The answer to that question, well, that's the key to unlocking the whole next phase of the AI revolution. You see, this global push for AI is creating just an insatiable need for more and more processing power. And to get that power, it's not enough to just make more chips. We need chips that are exponentially more powerful than anything we have today. So, how do you make a chip more powerful? You have to pack more and more transistors onto it. And to do that, you have to shrink everything down. But here's the problem. We are now operating at a scale where we're bumping right up against the absolute physical limits of manufacturing. The engineering problem is just immense, and figuring it out is the only way to keep this AI boom from grinding to a halt. So, who's the one solving this seemingly impossible problem? Well, that brings us right here to Section 2, and to the company at the very heart of our explainer today, ASML. And to put it simply, they are the only game in town when it comes to manufacturing the world's most advanced semiconductors. So, the answer to our opening question? It's a process called lithography. It's basically the technology of using incredibly focused light to etch these fantastically complex circuit patterns onto silicon wafers. And when it comes to the most advanced form of this tech, the kind you absolutely need for the next generation of AI chips, ASML is the undisputed master of the universe. This position gives ASML what analysts call an unbreakable moat. And it's not just that they're a market leader. In the most critical segment, they are a true monopoly. ASML is the only company in the world that can build what are called extreme ultraviolet or EUV lithography machines. Think of EUV as using a light source so fine and so precise that it can draw circuits smaller than a virus. It took them decades and billions of dollars to perfect. Without these machines, companies like TSMC, Samsung, and Intel, they simply cannot produce the next generation of chips, period. This makes ASML a truly scarce asset and an unavoidable choke point in the global tech ecosystem. So you have this incredibly dominant, one-of-a-kind technology. Now, what happens when it smacks right into a tidal wave of demand? Let's get into Section 3 and see how this all builds by focusing on 3 powerful growth drivers that analysts are really excited about. Okay, driver number 1 is a massive investment cycle from the absolute giants of chip manufacturing. This chart, it's based on Morgan Stanley data, and it shows the skyrocketing demand for ASML's EUV tools. Just look at TSMC, the world's largest chip maker. Their estimated demand for these tools in 2027 has leaped from 28 all the way up to 40 units. And you can see Intel is also set to really ramp things up as well. All of this is being driven by the need for more and more advanced logic chips to power all those AI servers. Driver number 2 is the AI-fueled memory boom. You see, AI doesn't just need smart logic chips. It needs huge amounts of super fast memory, stuff like high bandwidth memory or HBM and DRAM. Demand has become so intense, it's pushing memory prices to levels we've never seen before. And this is forcing memory makers to kick off a massive factory building boom. And guess what? Every single one of those new factories will need to be filled with ASML's machine. And the third driver? It's actually a really positive surprise. For a while, there were these nagging fears that demand from China was going to fall off a cliff. But as this quote from Morgan Stanley points out, the situation is way better than anyone feared. Instead of a big decline, sales are now expected to be pretty much flat. So the key takeaway here is that this removes a major risk that was hanging over the company and provides a really stable foundation of demand. So you have these 3 really powerful drivers all converging at the same time. What does this actually mean for the company's bottom line, for its financial performance? Let's pivot to Section 4 and take a look at what analysts are forecasting, specifically for the year 2027. And wow, the expected impact is huge. Based on Morgan Stanley's models, ASML's earnings per share are set to just explode in 2027. We're talking a projected 57% jump year over year. This isn't just some steady growth. Analysts see this as a massive inflection point in the company's profitability. Let's look a little closer at those upgrades because the numbers are pretty wild. This table shows just how much analysts have had to raise their expectations. Total sales forecasts for 2027? They're up 18%. But check out the bottom line. Operating income and earnings per share forecasts are both up a stunning 35% from what they thought before. 35%! That tells you there's a whole new level of confidence in ASML's earnings power. And all of this analysis, all these numbers, they lead to this. Morgan Stanley has dramatically raised their price target for ASML to 1,400 euros. That is a huge increase from their previous target of 1,000 euros, and it signals a major reevaluation of what this company could be worth in the future. Okay, so let's pull this all together in our final section. What is the core investment thesis here? Why do all these analysts see so much potential upside for a company like ASML? Analysts basically see two main paths forward. The base case, which gets us to that 1,400 euro price target, assumes that solid demand continues, and that values the company at about 31 times its projected 2027 earnings. But in a more optimistic bull case, if growth is even more rapid, that valuation could get pushed to a higher multiple, maybe 40 times earnings, which suggests a potential price target of 2,000 euros. The key argument here is that a company with this unique monopolistic position in a massive long-term growth industry, it just deserves a premium valuation. Now, of course, no investment is ever a sure thing. Analysts are pretty clear that investors should keep an eye on a few things: a potential slowdown in AI spending, maybe a peak in memory prices, or just a broader economic downturn could all hit demand. So, it's really important to have a balanced perspective. But the overall feeling on Wall Street, it remains overwhelmingly positive. This quote from Goldman Sachs really seals the deal on the thesis. They see a strong environment for what's called wafer fab equipment. That's the machines that build the chips. And it's all driven by AI. And they highlight ASML as one of their top ideas. They even point out how ASML benefits from the ever-increasing complexity of modern chips, a trend that is only going to accelerate. Which brings us right back to where we started. In a global economy that is, let's face it, increasingly built on silicon, every single major technology company has to pass through ASML to build its future. The demand is structural, not cyclical. The technology is a monopoly, and the financial outlook is accelerating. So we'll leave you with this question. In a world that runs on chips, is ASML the ultimate toll booth for the future?